Welcome back. Well, let's put the spotlight on the commodity universe as always. It's over to Manisha for the latest. Manisha.
Thank you for that. I'm looking at metals as a sector because October was great. November started on a positive note for many of these base metal prices, but doesn't seem to be ending that way because on the higher side, we are looking at profit taking coming in for many of these non-ferrous and ferrous metals. Well, to begin with, it is firm US dollar index. There's waning chance of a December rate cut. A 42% probability now is almost like a nil, and that's where the markets have seen some decline come in for the metals. Apart from that, it also has to do with other macro because the Chinese annual industrial production has eased to a one-year low of 4.9% for the month of October. It has been a sharp decline from what we saw in the month of September and down also from what the markets were anticipating. And this is exactly what the metals have reacted to. Aluminum trading at a one-month lows. You have zinc trading at a one-month lows as well. It's a one-week low for copper and 31-week lows is where the nickel prices are trading. We've seen lead, steel, iron ore, all of those commodities also see a decline in the last 1 week or so. Well, the metals, though, are expected to take support going forward is what the street believes because the China has reaffirmed focus on curbing overcapacity on many of metal production. Steel was first and then came aluminum, and now there are conversations on copper as well. Apart from that, it also is about the electrification initiatives and data center expansions that we're looking at. So many of these green metals like copper, aluminum, zinc will find uses within this also. Supply concerns in various producing countries, mining, smelter issues, civil unrest, the power concerns, as we've seen come in for Indonesia, are some of the factors. And then apart from that, there are no new mines that we're looking at coming on board in 26. The existing mines also have given lower guidance. The ore quality seems to be deteriorating. All of those factors clearly are going to be supportive going forward for metals. But for the time being, this is what we've done for non-ferrous metals in 2025. The best of the gains, as you can see, have come in from tin, and then copper continues to be on the stronger side. Aluminum gained 10%, and then you have zinc just about closing this year in the positive. We also have a negative in case of nickel, down by 4% there. Take a look at ferrous metals there. And when you look at the steel prices, we've seen a 7% decline on that. But HRC steel in the US has seen a gain of 27% there. The markets also have seen gains, though, come in for the minor metals there. I mean, these clearly seem to have outperformed across sectors. Take a look at cobalt, 99% of gains on that. Rhodium is up 72%, palladium up 59% as well. So stronger gains when you look at for many of these minor metals. That list perhaps could just about go on. What the markets will watch out for, though, is the US non-farm payroll data that comes in on Thursday and an important level ahead of the US Fed meeting on December 10 and 11.
Okay. All right, Manisha. Thank you very much for that.